Alrighty, so I think we're live. I think we got this figured out. We're going to be looking at some stuff over here on NASDAQ, ES, just watching the overall market in this PM session. It's pretty slow action. So we'll be giving this just, a little bit of time to look at the charts. This morning was also a pretty slow session. So from this point right here, we're just going to kind of see what the market wants to do. So I believe the stream's going, figure this out finally. But what we have right here, like I was saying, it's pretty much the shift of a market, right? So you have, if we just kind of consider this from April all the way to where we're at in August, this has been a trend. I think everybody can see that. This is now starting to become a range. And I say that for a couple of reasons. We had a inability to break above a range high and the inability to break below a range low. So with those two reference points, we are now stuck between a high and a low. That makes it a range. When we're looking at a range, we want to see whether or not we're going to start to build value towards the highs or the lows. You start to find acceptance, meaning everybody's saying it's cool up here, because that will give us room to break through the upside. What we don't want to see is big swings into certain levels, because those are likely to get faded for a number of reasons, mainly because it's a lot of momentum and people are going to take quick profits. But what we have here in this range now, it's going to be big pushes and then likely fades. That's how I'm looking at it, or big dives and then likely rallies. So that brings us into today's session. We've had a bit of a churn higher. Opening range break, right? This was a good trade. Opening range break. When you kind of review price action, there's some ways you could approach this, right? Like maybe you did trade this versus this opening gap right here from a previous session. Maybe you did trade it above the 930 open break, or maybe it's genuinely above this swing point right here, or even session highs. However you structure risk is really going to be, it's individual. But in a trade like this, you don't have a ton of great entries other than just like entering. I'd probably enter about right here around this 930. That's kind of what I'm thinking. But you don't get like a real clean high or low. You have some here, but it's so muddy. It just kind of churns. So it's a tricky session is what I'm getting at. I would say days like this are going to be somewhat predictable, just given the fact that we are inside the previous day's session. And it gives you a lot of action like this, where are we at? Like, what are we doing, right? We had a dive into an hourly gap right here, sweep below a low. Now we have an external high up there. Question is, are we going to stall out at Asia? Because that's essentially where we're at right now, is these Asia highs. For the daily open, it's right around here. So that's really what we're stuck with. This is all we got right now. That's all we got. So in this action, I mean, when I see a lot of candles overlapped and I don't see any sort of clear pushes either way, I can already tell that a lot of traders are going to get frustrated here. So it's never a matter of being first in any trade that you see like this. It's simply just waiting for, the fatigue to kick in, because oftentimes that's when you'll start to see like a quick snap in one direction. Markets tend to reward people after the impatient people get shaken out. After the impatient people get fatigued to the point where they're not going to touch the market. So we sit here and wait. We sit here and wait. We'll review some other markets. I do think intra-market analysis and also evaluating the components of the index, those are pretty good tools if you are not familiar. You should always be considering what are the higher time frames doing, what are the other charts doing. So as we continue to kind of go sideways, we're just going to tear through some charts, have a little afternoon review. If a trade sets up, cool, we'll look for it, we'll go for it. But as it stands right now, I don't see much of anything. So what do we have on some of the components? You have Apple holding this higher low so far. That's a good look, right? You want to see Apple hold this higher low to then trade towards all-time highs. I would say that's a pretty reasonable assumption. Check out the Amazon. Amazon could be better. It's not terrible. Another trick you can do is add a 24-hour chart if you want to make it look a little bit cleaner instead of the daily chart. See what the Google's looking like. Yeah, Google's just tearing all-time highs. So stuff like this is pretty bullish, I would say. That along with the fact that crypto has been making a pretty sustained run. Ethereum's been outperforming quite a bit. Solana as well. Not nearly as much, but Solana's had some recent interest in wanting to go higher. So if we get the break above 220, then we'll really start to see some action. So check out the ES. ES is relatively stronger than NQ. It wants to go for that all-time high right there. NQ, it's got that inside day. So NQ is pushing towards the highs. Again, it's just one of those conditions where it's just kind of a drift higher. It's not much you can do in a market like this. All you can do is really look to get positioned against a key level. But there's just not a lot of that going on right now. You had the ability to get long down here, you know, under this previous low and this fair value gap. That's probably your best bet for the day, but yeah, and the fact it aligns with this new daily gap right here. This is from just back here, last Tuesday. Yeah, very sustained move, very one-sided. You see very shallow pullbacks. So when you start to see traits and characteristics like this, it just tells you that you shouldn't be trying to fade moves like this because it's just going to be the death by 1,000 paper cuts. It's just a very choppy market in that regard. You're not going to get the sustained downside. Back in February, March, yeah, sure, you'd be able to, you know, short a pop and then it kind of just completely round trips. But that's just not the conditions we're in. Take a look at VIX. You can see VIX is just absolutely getting crushed, like zero. Yeah, there's just no volatility, so you'll get a lot of those choppy moves. So kind of just take a glance at some charts. Check out YM. Nice move on YM recently. And just downside action today. So what I'll do right now is start to just get a good plan for what we're doing for the rest of the week. It's early, obviously. We haven't had much information given to us so far, just based on this week's trading. It's literally just been inside Friday's range. We have some data. Yeah, we have some data this week. Nothing crazy. I mean, we have GDP, of course. We have PCE. Yeah, we just have a handful of, you know, different data releases. So something's bound to happen with the market. We'll get a shake one way or another, and then we'll trade with respect to that. So what are we doing? If we look at this action, what are we doing? We grind higher. Every time we get to a new high, we fade it, fade it, fade it, fade it, right? So we're getting towards a new high, it starts to fade it. Eventually, if it is going to go down, one of these lows will crack, and then that becomes a better indication to get short. All of this is just, it's kind of random. It's kind of noise, right? It's easy to say, oh yeah, you could get a good price here. But largely speaking, we don't know what's going to happen. I don't have strong conviction that this will drift higher forever. And I do not have strong conviction that it'll immediately snap lower. So there's a good blend of opportunity that you have to kind of consider. When you have no directional bias or skew, you have to call it random because there's no hand to play. Now you're starting to get actual intraday consolidation. So you have about 10 minutes till the hourly candle closes for the lunch hour. And it is my assumption that for the PM session, we might see a bit of some action. Something more than what we got right now. You know, if we're looking at the last hour, that's when nap time started, right? Market sideways. There's nothing for anybody to do here. All you can do is wait. All you can do, honestly, in these conditions right here, all you can do is wait. You're either going to get a break below this range, break above this range, and then you have two options for either. It's either a fade above, fade below, or a continuation either way. But that's what we have. You can even argue you have like this right here, make it wider, and then you have this sweep right here. So what do you think? What do you think we do right here? It's easy to want to get in because you can think you see something that's going to happen, but unless there is an edge, meaning something skewed in your favor, some information that makes it more likely for you to win than not, it's simply a shot in the dark. For any sort of high conviction trade out of this consolidation, you want a strong indication. You want a clear break, you want a clear entry model, and then you can take it. Sure, you can take a trade in this area with the stop like at the structure highs, but you're not going to do it with any reasonable size. You just can't. You cannot put size behind an idea that's based on a loose bias. You need a very tight invalidation point, and you also need something that's just very, very, locked and loaded. So this is the Asia high right here. What you want to do typically on any given day is just mark out your session highs. Asia high, low. You want to mark out London. You want to mark out AM, the first 30 minutes opening range. First hour would be your initial balance, but you do want to mark out these session ranges, the high, the low, because it's going to tell you where you're at in terms of a reference point. We know that we have a London session every day. So if we're above it or below it, that gives us a bit of info, especially going into the open of the New York session. If you're expecting a mean reversion type of day, you're going to use these limits, these Asia highs, London lows. You're going to use these as benchmark areas where you're looking for price to kind of revert, right? If you expect the day to be a consolidation, that's what has to happen. If you expect it to be a trend, you're going to look at these ranges and you're going to expect those to be stepping stones. You don't want to see a break and retest any sort of session high. That's a piece of information that gives you an edge. Location's pretty much the most important thing you can have for the session, because location's where events happen. Location on a chart is where you're going to get things that occur. Sure, price can do whatever it wants anywhere, but location is typically what's going to generate the most clear moves in your favor. It's just going to be very one-sided because you get all the time frames doing the same thing. So if you take a minute and look at this, we have the Asia session. We traded lower in London. We swept out these lows, opening range break, shot up. Now we're back at Asia highs. And if you look at the 15-minute chart, we went sideways for about an hour and a half. This is a location. This is an event. Something is happening here. We just don't have all of the information to process if it's going to go up or down. But we do see that there is something occurring. Typically, after expansion, you get contraction, and then you can get continuation or you can get reversal. Those are the options. Make that real clear right here. This is what we're looking at, the sweep above that high. We want to see whether or not it's going to stick. It's going to really be based on these candle closes as well. I would say if we start seeing 15-minute candles close below Asia high, there's a fair likelihood we come back to at least VWAP, or at least 50% of this range from this morning, the session right here. So you see right here, yeah, 50%, boom. So that's what I'd be looking at. You see it a little bit heavier. It's getting a little bit heavier, especially if you start zooming out. The 5 minute, we're starting to get sequential or just one after another closes down. So that's 3 15-minute, or 3 5-minute candles. So you get 15 minutes of downward action so far. If we start closing below here, that's a good indication. Then the idea would be whether or not we just sweep that low or if we're actually going to displace below it. I think the 15-minute really is right now all we need. I think the 15-minute will give us a good indication of whether or not this is going to revert, and we can really see that lower time frame interaction based on the wicks. So if you have a 15-minute chart open, anytime you find yourself, if you ever find yourself getting chopped up intraday, zoom out, because this 15-minute chart, I can see all of the 1-minute action right here. These wicks, that's the 1 minute, that's the 5 minute, that's the 30-second chart. I can see all of this happening. So if I see wicks at the highs, wicks at the lows, but the bodies are right here, I could just stick on the 15-minute. Until I see something close below these wicks, I already know it's going to be back and forth. It's going to be sideways. So why do I need to zoom in on it? So we have about 2 minutes, a little over 2 minutes till the PM session kind of kicks off, at least that first hour, the 1 p.m. Eastern hour. What we really want to be watching for is whether or not, again, we're going to close above or below this Asia high, which is marked out in this gray box. We've traded above this swing high. We traded below these swing lows. Now we're back to essentially the session high, the high of day, and this Asia high right here. So prior day high would be right here. You have a few levels to each side, so it's very reasonable. You could trade to either side, but again, this is our reference point, this Asia high. If we are truly bullish, this will be a high or low right here. If we're going to revert and keep this as an inside day, or even for some reason trade to this low, then we have to start to close under here. There's no other way. You cannot trade lower until you start to close underneath this previous range extreme. So I like to do that often with London, with Asia. These are ranges you want to see. Even right here, here's a good example. If you're looking at this downside trade from London session, you have the London low, you have this fair value gap that was created, and then you see that there's this break and it stays below. You're not able to know that this short is going to work until you start closing below the range low. Unless you're in here, that would be like a 50% kind of trade, or like optimal trade entry from the swing high, swing low. You get this nice pullback. This is a good trade, but for anything below the Asia low, you have to start to see a close. Otherwise, there's no way that it's going to trade. It has to close in the direction you want it to go. So when you break it apart like that, it becomes really easy to understand why shorts are hard until you start to see it close under here, because you don't have indications going to. So here we are, 1 p.m. Eastern. We got a heavier close, nothing crazy. It didn't close below the candle low or anything, but we are underneath Asia low. Looks like just barely, right? Yeah, you're just barely getting that close underneath Asia low. So you see it kind of wick higher on this first 15-minute open. And now we are just kind of trading below. So this is what we want to see. If we're looking for it to come back into the range, you want to see it close back in the Asia limits. I would be looking at this to the downside if we are going to continue. I'd be looking for somewhere near equilibrium, 50% of the range. It could get to session lows or whatever. I think that'd be kind of crazy, personally. But, you know, it really depends. So we never got the break above session highs. Those lower highs always. You see right here. You're starting to get that curl. It's no guarantee yet. It's no guarantee, of course. There's a lot that can still happen, but we do see that we are starting to hold below the Asia high. That's exactly what you'd want for any sort of downside move. So we have to take away that line. Yeah, this is really the only chart I'm looking at. So you have these session lows right here. Let's make these blue. We have some imbalances in this upper portion of the price run right here. You see there's a gap right here. That can act as a support level. Not because it's colorful or anything like that, just because we've seen price bounce there before. So this area that, because you got to think, what is actually happening? You have a consolidation here on the lower time frames. It breaks out. It's breaking above here and breaking above here. That's where you see that expansion. So there's some people who chase right here, or some people who are in from right here that might be looking for this to be the higher low. That's what makes this an area that you have to watch out for. You see reactions here. It's not because it's like some special, you know, just it's logic. It's nothing more than that. It's not like some secret. You see price bounce here, and this is just an area where we saw a lot of move based on that 15-minute. So this is kind of the predicament we're in. We have to hold below here. We have to overcome this. Otherwise, it could just kind of do some more of this. If you're learning anything, if you like hearing my thoughts, my breakdowns on this, leave a like, let me know. We are going to be doing giveaways all week. Just to kind of clarify, there's a massive giveaway going on right now. If you check out Top 1 Futures, I have it linked through my website down below. Buy an account with my code, you get entered to win one of like 40 accounts. So if you're looking for an account, this is a good time to do it because you could get an extra one. You know, not bad if you ask me. But when it comes to price action, I really want to be looking at higher highs, higher lows. I think that's the most important thing that we could be considering right now. I call this, like, I view this right here as significant. The fact that we did not make a new session high. I'm not sure if there's an SMT. I can check. Yeah, see, we do have an SMT right here. All right, give me a second. Let's see what my dogs are barking at. Awesome. So we're starting to see the move down, at least on ES. I don't know what NQ looks like. I just had to go. Yeah, I just had to go check what my dogs are barking. I have people working at my house. I have some guys doing some electrical stuff. So okay, let's read the chat. Broski, all you need is fair value gap and liquidity trap continuation. I would say that's a pretty good. Yeah, I mean that's a big part of it. I mean, you can always use whatever it is that you like to use, but I do think that fair value gaps cover a lot. I think they really do. So here we are. Look at this 15-minute. We did mention this fair value gap right here that we're kind of bouncing at. So when it comes to like all you need, I mean, I wouldn't say all you need, right? Like they are important, but you need context. Liquidity, yeah, that's kind of what we're talking about with these session highs. Time-based liquidity, I think that's super important. But I think just the logic behind things really matters. It's not just, oh, this is an old high, so it's important. No, this is the session, this is the Asia session high. So if we're going to see a trending day, we have to kind of trade above previous session's highs or below the session low. So here we are, we're starting to see that pullback. Again, what we really want to monitor is, are we going to sustain these lower highs and then lower lows as well? Right here, this is in fact an SMT. You can mark it out if you want. Do whatever you want with it, right? So you take, I believe it's just right here, this high and this high. If you pull up ES, you'll see the, yeah, so ES would be right here. This high, this high. Yeah, 1245 high. 1245. Okay, so yeah, that's a genuine SMT. So this is the development of a setup you might see. This is a development of a setup that might work, right? I don't know if this is going to get traded above, but my idea, at least anybody's idea, if you're saying SMT, you believe this is not getting traded above. So you believe this is going to be a near-term high, maybe a intermediate term high. It could stick around for a bit. It might be the highest session. I think this could be high of session. I'm not sure though. I'm not sold on it, right? Like I'm not overly committed to one bias. I think it makes sense for it to roll over. I think now we have the most context for it to do so, but I don't think it has to, right? I'm not like, oh, this needs to roll over right now or else. I don't know. It's been going sideways all day. You know, if it's going to start to change, we'll start to see indication of it, but I can't be certain that it's going to do this. All right, let's get this chart a little bit cleaned up. I want to do, how am I going to do this? I want like, all right, that way I'm never in the way. So it naturally should be, yep, I'm not in the way. Cool. So with that SMT in mind, you'd want everything after that to be a lower high. Maybe you get some internal sweeps, maybe like a high like this gets ran out. But if you are assuming that this is going to be the start of maybe an intraday reversal, you would expect that to hold. Your counter signals that you are currently observing or that we currently have in play would be this 15-minute gap that we called out. I don't know. We called this out probably 10 minutes ago. We were saying this was going to be a problem. So now our new range really is going to be below here or above here, right? Whether or not the SMT actually holds is now going to be kind of the point of interest. So we'll take a look at this for probably a little bit longer. We won't do too long on today's stream, but we will be back tomorrow. We'll be back all week. So if you're enjoying anything you learn, leave a like. Leave a like, let YouTube know you are liking what you see. And I think you can hear my dogs. They're going crazy. We got some electricians here. Another thing, anytime you're observing a trend, you want old opposite candles to do the work for you. So what does that mean? That sounds like some nonsense. Well, it really can be if you're looking at the wrong way. When you have a series of down candles, right? Like right here, you have these down candles. What do they do right before that move up? Right before this move up, they push down. Like that's super clear. They push down and then they get completely ran through. So something was pushing this, right? Some people, some whatever. When it gets broken above, that's like the oh crap moment, right? So if it comes anywhere near this, they're going to look to get out of the position if they're not already. So there's an immediate kind of break and retest, is that inversion kind of idea. That's what your order block is. It's not some magic mumbo jumbo. It's logic. So when you have an uptrend, right? That's what you get. When you start to get a downtrend, you'd want to see these series of pushes, right? Any sort of push, any sort of like dig higher. You'd want to see those act as the opposite. You'd want to see those act as the opposite when you start to get that rotation to the downside, right? So these pushes higher, when you come back into it, any sort of longs would look to neutralize. So there's an inherent flip in the supply demand, right? The motives of the traders there. That's what's going on. That's an order block. So I would see something like this little bullish push, right? This handful of candles right here, these three, and then it broke below and then it came back into it and then it just said, no, thank you. If it really is going to be valid as a downtrend, you'd want to see those things kind of keep doing that because it shows that there's a change in the character of how traders are engaging with the market, how liquidity is being processed, what the motives are, really. That's the best way to think about it. It's all about motives. Because if it's a range, those up candles or down candles, they're relatively harmless. They don't mean anything. It's sideways. There's no directional skew there. When you start to get it to flip to the downside, or vice versa, when we saw earlier this morning with all the up movement, those down candles act as support in the uptrend. The up candles act as resistance in the downtrend. That's that break and retest, right? People look at the old swing lows tagging. I prefer to look at the opening prices of those pushes, not just the opposite candle because it's the opposite candle, because it tells me something. From this point, there was a little dip and then it pushed. So if you get below that, it's going to be a little bit sensitive. Candlesticks will always operate on the process of open, high, low, close, or open, low, high, close. It's with a daily candle, a weekly candle, session, right? 9:30 open, we can see that that's also a reactive level. So that's obviously a 30-minute interval. This right here acts as a level of either resistance early in the day, and then after it would act as support if it were to come back to it. In theory, that's how you look at it. So I'm always looking at opening prices. I'm always looking at closes as well for sessions. These are the things that I think are important. I don't think it's super necessary for you to know every, Pokemon character ICT concept. You just got to know a couple things, but the main thing that really does matter is going to be opening prices and really just how candlesticks operate. Open, low, high, close. Meaning there is that sequence, that time. So when we have something like what we have right now, again, what we're really looking at is the premise of a sweep above Asia high. That's been what we've been talking about. We've been talking about this for a bit now. A sweep above here, and when you're starting to see closes back in the range, it gives you the indication that we might be more likely to go down than up. Here we are, right here, 15-minute with the fair value gap. That's the downside counter signal right now. This is acting as a problem. So we want to see us trade below this to really get some conviction on the downside play. And remember, we're only 15 minutes into the PM session, quote unquote. 1:30 is typically where you start to see some more sustained movement. Lunch hour is typically slow, as we saw today. But this morning was, kind of grindy. One good trade. You had one good trade with opening range break. So watch this level, right? That's what you want to see. If we're going down, break that level. That's all we need. So we're still right at that gap. Notice that. Notice how we react to that fair value gap. That's really going to be what decides if we're going down. I know it sounds obvious, but like the more you really think about what has to happen for you to go a certain direction, the simpler your trading gets. We cannot go down until we get below the support level. At first, it was below Asia high. We can't go down until we get below Asia high because it would have to be a failed breakout for the breakout to fail. So now what we have is a potential higher low area. Why is it a potential higher low area? Just based on the fact that statistically speaking, areas that come back into, a place where price reacted, you see that little wick right there. Also places that were previously strong, aka a broad candlestick breaking above a level. This is an area where you could find support. It's actually a very common area for support. If you go back through historical data, you'll see a lot of examples of that. So that's why this is an area of support for us. If we want to trade lower, we have to break support. So I would never get too committed before you have a real good skew in your favor. You could nibble, sure, you could just throw pennies at it, but you don't want to do that all the time. You do take a couple shots, because ultimately your best trades are going to come from that snap in your direction, that tight retracement, and then you throwing a lot of size into that. So it's like they say, save your pennies, because you can turn that into a bigger trade. It's actually really risky to take small trades, to take small losses, take small trades, because what you're doing is you're taking trades that have a low win rate. So there's a very likely chance that you're going to lose because you're trying to put feelers out. If you do that too much, it compounds like anything else in life, right? It's seemingly harmless, but the more you do it, the less ability you have to maximize the bigger trades. Like it just diminishes. So we're going to just wait. Let's get below this fair value gap. Let's get a snap in our direction, like a real strong snap. And then if we see something pull back nicely, we'll throw some size into it. Until then, we are just on, we're in the hole, right? We're on deck. We're not at bat yet, but we're getting close to wanting to take a stab at something. I'm telling you, probably below here. I say below here. Start scanning for entry here. If we get below here, we will look for an entry. Until then, we will just enjoy the nice, peaceful, serene range that we have. Listen to the birds in the background or whatever. But we do not have a trade right here. This is not a trade for me because although it's a good area, although it aligns with what we want technically, the ability for the market to go just like this in a couple candlesticks, it remains undefeated in this climate. So our goal is simple. We wait. Keep it very simple today. We just wait. We have 9:30 open right here. We have VWAP right here, and we have 50% of the range for this New York session. A lot of levels that we can easily run for. We just need to see something in our favor. About 10 minutes. I would like to see something break below this fair value gap before 1:30 Eastern. Realistically, we need to get some sort of setup before 1:30, like 1:50 Eastern, for us to have a real chance at running anywhere below VWAP. Otherwise, it's speculation. We're just guessing. But if we're looking at, really, we need to get a break below here, probably by this time. I'd say by right here. This is going to be like our where we want it. This orange line. Now you might be asking why that orange line? Because you have to consider the range of these 15-minute candles. So if I need it here, like if I need it, I don't know, below here, by this time, that gives us really 4 significant 15-minute candles. And if you take a look at the 15, All right, and we're back. Like I said, I have some electricians here doing some stuff, so I gotta go open some things for them. How you doing, doggies? So, yeah, we're just watching this area. Like we said, there's no trade just yet. There's no trade just yet. But what we have is the opportunity to look for a trade underneath this area, underneath there. I don't want to be first. I'd rather just wait. I mean, we really are starting to get some structure. So I'm going to look at this right here. Make this a little bit bigger. You also have a fair value gap right here. So you're starting to actually see the beginnings of an attempt at a change in character. That's it. You have the SMT at the highs. You have the shift below the previous swing lows. I would say this is pretty aggressive. Relative to the other downward moves, I'd say this is relatively stronger. So this is the first chance of like a change in character. So if you're looking at something like, the historical model 2022 that everybody loved for a year, you have this as your market structure shift, right? This is the beginning of that reversal. It's the beginning. Does it mean that you have to get the move? No, not at all, honestly. It doesn't mean anything, really. But it does mean that there's a chance at it. So we have like one feeler from earlier. We're going to stop at the high. We're just letting it work. Yeah, it's like one feeler. I don't really want to size into anything just yet. But I mean, you could probably just do this. I just do this break even. And then if we're looking at, yeah, we want to see if it's going to break below here. That's really the idea. So this right here was a level from Asia. I don't need this anymore. I don't really need any of these levels. I could probably just delete everything. Cool. There we are. So we have that going. I like this chart right now. We're going to keep looking at this. Again, we want to see it kind of break below the structure right here. You have that fair value gap. Again, this is going to be your bearish fair value gap, right? And you have to do it in red because red means it goes down. That's what they tell you. But realistically, I want you guys to see it's just logic. You're starting to see a stronger push down and you pull back into it, you'd want it to hold some of that downward move. Typically at the spot where it had that big move, that big candle. Very, very common kind of view. So we have right here. Yeah, look at that 15-minute candle. This is starting to look better. So I might look to add into this pretty soon. I might look to add, like maybe right here. Let's do one. Maybe add one below the break of the candlestick. Interesting action. So we're starting to see the beginnings of that move we wanted to see. It's not a guarantee yet. But we do have the start of it. Did it tag me yet? No. So I have one that I'm going to add. Because this is break even. What, $9 or something? Yeah, whatever. Yeah, we want to see this start to really just roll off the highs. Below here is a good indication. Make this a 2-minute. Okay, minute and a half till the next 30-minute close. We really just kind of want to monitor this to the downside. We have levels of interest. I mean, we have enough time. It's only 1:30. So if it wants to do something, it's got some time. That's going to be your biggest issue with PM session. All right, I'll repeat it. You need time for things to work in PM session. So if you see a setup and it's like 325 or 323 or 257, it gets tricky. because there's really not enough time for those 15-minute candlesticks to start expanding the way you need them to. So we have 3 contracts, break even. It's really just kind of a feeler position. It's nothing to lose sleep over. But we're working on this to roll. That's it. We just want to see it roll. 2-minute chart looks a little bit cleaner. I need to see some sort of bigger candles pretty soon. I don't want to keep seeing these tight, narrow, just clinch of price action. I want to see it start to stretch, open up, you know. You run the risk of dealing with chop in a session like this, given that it's an inside day, but you do want to make sure that you are maximizing the opportunity you have. So if you start to see a setup and there's a handful of confluences, then you can look to take it. But, you know, we're still stuck to that gap. Our stop is kind of in a awkward place. It's not terrible, right? I can technically give it to $6. Let's see. Yeah, I can technically give it to $6. So I don't necessarily want it to go red. But this balance is kind of unfortunate, right? This is the opposite of what we wanted to happen. So it immediately bounced as soon as it tagged us, which is the risk you run when you take an order block type entry. It has the ability to kind of sweep above these highs, but without it closing below that 15-minute fair value gap, yeah, look at this. So this is really what happened. You get that stab lower, it closes into a doji, and then the 15-minute opens and then just runs. That's a sequence, right? So it's stab lower, second candle was supposed to try to break it, it closed real quick, and then now the sentiment shifted, in my opinion. So yeah, if I get stopped out on this one, that's fine. That's where I want to be out of the trade, because the 15-minute is actually looking pretty beefy at this point. Doesn't mean that it has to work though. It doesn't mean that it has to go up. This thing can easily flip. But with that sequence on the close, remember what we were saying about closing prices, opening prices, closing prices, that stuff matters. This is exactly why. Because all of this wick came in the last like 10 seconds or 15 seconds or minute of that candle, and then immediately pushed higher. Could have got us too. Could have got us if we were a little less precise with it. So now what? You want this to break below here. That's what you want to see. If we're truly bearish, right? If we're truly bearish, guys, we want it to break below here. That's the premise. Regular NQ chart over on TradingView. That's kind of what we're looking at. Looks messy, doesn't it? Looks messy. Start looking at these time frames like the 15, you start to get a clearer picture. It's still the same trade we've been talking about. We'll get rid of all the little BS from the 1 minute. We already know there's a market structure shift. We can see it. We saw it on the lower time frame. We know the SMT is there. We don't need to know an SMT is there. We already know. We've been known. So now, what are we going to do? It's not a trade. It's not like there's no belief that this is going to work until we're below this gap. Until we're below here where it's shown support now twice in the last 30 minutes, also once this morning, until we get below this level, I don't think the trade will work. I don't have a reason to. It doesn't matter if I have a position or if I need it to work or blah, 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 blah. Who cares? I do not believe it will until we're below here. That blue line, until we're below this blue line, I do not consider us to be in the driver's seat. You can hope and pray all you want, but we need confirmation. So what are you guys trading today? I know there's a couple of you in here hopping back in, in and out. I appreciate you guys hanging out. What have you guys been trading? If you're learning something, yeah, let me know. Leave a like. I figured hop on for a PM session stream, just, for fun. Alrighty. Let's see what we got. 2 dojis. We had an up candle, down candle, bullish candle, bearish candle. You got a good mix of things, right? It's nothing too crazy. We want to see this break below this fair value gap. That's really going to be our main emphasis. Then below swing point. Until then, we can kind of swing either way. I do believe we have a bearish bias at this point, given really this break right here. I think this one was pretty significant below the swing low. And then again, that little fair value gap right there. I know I deleted these a second ago, but we're gonna run them back just so I can emphasize what I'm talking about. If you guys are not familiar with TradingView or even Project X, one thing you should be doing, just a free tip. If you have annotations for a certain time frame, just sync them on that specific time frame or below a specific time frame or above for whatever you're trying to do, just to keep your charts clean. Because I have these two little lines right here, this red box. So if I go to the 15-minute now, it's gone. So I don't have to look at it because it won't line up. Back to 1 minute, it's there. Go to the 2 minutes, gone. Beautiful. That's like one of the best things you can do to keep your charts clean. So you see it's starting to inch lower. It's starting to, right? It's starting to inch lower. It wants to try to work through that gap. If we get it through this gap, we really do have a shot at some downside momentum to at least here, at least 50% of the range. So what I'm doing is I'm trying to just add on areas where it should be confirming, right? So this break below, I'm okay with doing that. What I'm willing to risk is just still break even. I don't need to add risk. I'm willing to just reduce the adverse move, meaning I have a tighter invalidation point, but it's still net going to be the same. However, the upside for wherever I put a target, let's see, let's do what, session lows or something? You have a bigger chance at making something. I don't need session lows. I could just do this, right? I don't really care. Session lows are equal lows if you look at it. Yeah, this is just like slight higher low. So I mean, it's possible, but it doesn't have to happen. I don't even know if it's going to work yet. It has not yet broken below this fair value gap, which is our criteria for it to work. So puts us in a predicament. We really need to break below that level. Let's see. What do we have? Stops at 88.25. Yeah. Okay, cool. So you do 88.25, just set an alert. Now we just chill. Just chill. Just wait for it to break. Wait for it to break below the lows. All right, it's looking better. Looking better. See those 1 minute candle closes? I kind of like these sometimes. When you see this little, like, I don't know, hammer or whatever, but into the lows, I think it's always a pretty good indication that we're seeing like it pushed higher, then it wants to stab and force lower. There's just a real clear reaction in my mind when I see that. The opposite is true also when it forms a hammer underneath. That ends up being some sort of turtle soup, some sort of spring, a little bit of a sweep action. But yeah, I would want to see this close weaker, close underneath the opening of the 1 minute, and then start to do the same thing for the next couple candles. This is a moment where if it's going to try to break, it really needs to kind of step it up. Because of the type of session we have where it's been drift higher, any stab below an old low really, really, really needs to just give it its all right off the bat. Otherwise, it's just 2 candles, we're back at the highs. It's very monotonous. So these reversals on days like this, it's just better just to wait for the clearest signal, because again, we're sweeping below a low, but like we did that over here. We did that like kind of here. You could find examples where it did that and then it just runs out the stop. So if the stop's right here, you need this to kind of step on the gas. Otherwise, it's just going to do it again. We're just kind of just very monotonous with how it runs to the highs. So holding below gap, you got your market structure shift. This is now an old low that broke, but did not close below. So it's, for me, it's a sweep so far. Where do we go from here? Let's see. So you saw a spike in volume right about here, which aligns with that break to the low a day, which was our market structure shift. You can see it pretty clearly. It's like it's the same thing. So we can see that there's a correlation with volume. Now, if we're breaking lows, we want to see volume kind of increase. There's not always a correlation with volume. Volume's sometimes misleading. Volume's not necessary either. It's not necessary. But if you know how to read it, you can use it to gauge basically how strong momentum might start to become. But to say it's useless is it's kind of clueless. There's context where it makes sense. There's context where time and sales make sense. So we're seeing this push. Look at this 1 minute candle kind of jump the gun right here. This is a good 1 minute candle so far, and we're seeing volume spike. Volume's already outpacing the last 20 candles, and the candle's 45 seconds to go. So we know that this is a spike in volume. You see what I mean? Expansion in the range of the candle. Volume bar is larger than the average of the last like 20. Let's see, I can probably pull up a moving average length, volume moving average. See right there, boom. Volume moving average the last 21 candles is much larger, and it's halfway done. So that's a spike in volume. That's a spike in volume on a break of this structure right here that we've been talking about. Our stops right here. We want to see that kind of continue, right? Maybe make this a little bit clearer for you guys. I know this blue line's kind of ugly, right? So it's a little baby red line. Okay, cool. So yeah, that's a massive spike in volume, massive spike in range. So it means that our short's working. This is an indication that the short's going to work. To how far, I don't know. Are we going to run session lows? I really don't know. I think midnight open's a reasonable spot. I think VWAP's a reasonable spot. If you're in this trade or whatever, if you're trading something like this, I'd be watching VWAP right here. I think VWAP's going to be it's going to be an obstacle to overcome like anything else we've talked about today, from Asia high to the fair value gap. Then it'll be these three. It's just a game of, can we overcome the next obstacle? And it's really to be decided. This was a good break. I just don't want to see it come anywhere near the back towards the range. So what are we up? We're up 200 bucks on this. I can trail it to like right here. That's like really all I could do right now. I'm not, I mean, I could trail it tighter, but I don't want to. I don't think so. Maybe like right here. Once we get another candle lower, I'm putting it right here though. I just need to see us trade below this low. So we'll monitor this. We're up 200 bucks, 4 contracts. Maybe have some fun, go for the session lows. That'd be cool. It'd be cool to go for session lows, but I mean, who cares, right? Anything's good. But this is just unfortunate. 29, or is that 39 bucks? Yeah. So we need this fair value gap right here to hold. Let's see it. Let's see. Are we going to hold? Are we going to hold this gap? It's kind of digging deep. It's kind of digging deep. Alrighty. Let's see what we got. So you got 30-second chart. You know, if you trade below here, that's an order block, right? We're still pretty high up in the session. Pretty high up. Like we could technically use this as an entry if we wanted to. Let's see. You know, I don't know if this is going to keep running. It could keep running. It kind of looks a little squirrely. But if it, for whatever reason, wants to hold, you could potentially enter like right here. Just probably add one, right? Yeah, on a return back below the fair value, yeah, we can add. I don't know if it will. I think it might just invert this thing. Yeah, this is the struggle right here. I mean, it is retesting that 15-minute. So put this right here. Kind of just weighing out what my options are at the moment, right? I don't want to strangle the trade just yet because I don't think it's really done anything, and it still could fail right here. I'd rather give it a little more grace to kind of figure itself out than strangle it. The $200 really isn't going to make a difference at this moment. So the idea being, we're now retesting this fair value, or yeah, the 15-minute fair value gap, and then this order block that we entered on. So I think like a 30-second inversion, maybe with a little bit of space, maybe like a little bit. Yeah, you get the 30-second inversion right here. This could be a pretty nice little entry to add on. It's kind of the same price as our last entry too, so it's not terrible. It's not super low. Let's see, can we get this brighter? So basically, if we get back underneath this little 30-second gap, we'll be shorting that rip. That's the idea. I don't want to, yeah, like right there should be fine. If we're bearish, we shouldn't trade back into that 15-minute fair value gap that we inverted. There's no reason to. If we're bearish, we should not trade lower or back into that, sorry. So here's the 15-minute candle we just opened. Yeah, we really do not want to trade through this, which I think we might be doing right now. Take a look at where's our, yeah, stop. Yeah, you really don't want to see this because then it just becomes a sweep to the downside and then it's just going to run for the highs. So awkward situation. I mean, I give it like that much room, you know, it's kind of an arbitrary stop, but we're not going to let it go red. There's no reason to. The idea is that if it's going to stall out, maybe the midpoint of this gap, right here, the inversion, that's kind of what I'm thinking. Yeah, just leave it like that. So the idea, again, lower high, midpoint of that 15-minute inversion. This is now right here, this is a 30-second inversion. I guess we could take it below here. Yeah, this is an inversion. It just went one leg higher. So this is kind of how I go through price action, right? I'm really waiting for some sort of structure to kind of form to allow me to then consider adding to the position. I don't have the best method for adding a ton of size here. What I can do though is wait for the trend to kind of show me that I have the right idea, and then I can get real precise with where I'm adding. And then just trail the open profit and kind of use that as like the margin to cover the extra entries. So that way I'm never coming out of pocket too large for one trade. I can just scale into trades when they give entries. If they give entries, right? Like this thing right here it's getting real squirrely. You know, we're about almost 150 right now, so I do need it to kind of go lower. Otherwise, I'm gonna kind of give up on it soon. I really do need it under lows around 150. Otherwise, I'm not interested. Oh shit, what time is it? Nice. Thought I was late for my haircut. We're good. But with that being said, yeah, we'll be getting off in a bit. Alrighty, you see it kind of holding so far? You want this to form as a swing high, otherwise the trade's done and my stop's in the best spot, right? Like it's got maybe one last chance right here to kind of hold, but I'm not like overly convinced that it needs to hold as it's still valid. It can invalidate if it wants to. Very clear. So you have a chance for there to be some sort of wick that holds as the high, but to me this looks pretty strong. Like it looks bullish at this moment. But you know, things kind of flip pretty quick in pivots like this. With that being said, if we do get back below this swing point, I'll just add right there. I won't wait for anything. Right? So the idea is it can stop us out here, which is fine. I accept that exit. And if it rotates, I'll accept this entry and then trail it back above the swing point. So it's just a little game of like cat and mouse. I could probably rotate to a 1 minute at this point. I don't really have an extra edge from looking at the 30-second at this moment. It's generally the same thing. I mean, I could probably even get to the 2 minute. Like, what's the difference? Yeah, 2 minutes fine. Just stick on the 2 minute. There's really no difference between them. So then, yeah, our next goal below that, below where we're at right now, below this is a swing point, would be below here as an order block. And then you have the swing low. And then you have party time. Ask yourself, if you're looking at a whatever time frame, if you're looking at a 15-second, a 2 minute, 5 minute, 10 minute, 15, whatever, ask yourself what's the benefit? Can you rotate to a higher one? Because it's less data to look at, you know? Unless you're really getting some sort of in the moment, some sort of information that you might not from a higher time frame, like dude, just rotate. You don't need to stay on the tiniest time frame. So we were up like 200 on this trade. Now it's pulled back. It might take the trail. So the problem with adding sometimes is your average gets skewed, so your trail ends up being kind of muddied by where your entries are. But regardless, we're still waiting for this rotation. If we get the flip, then we have the entry, which will be nice. But again, I'm not saying that it has to hold here. It's showing that it doesn't want to. It's showing that it's willing to try to go higher. All right, let's see. Let's see. We'll probably get the trail right now. I mean, it's looking like it's going to reach for it. I mean, I'll probably just take the 20 bucks when it hits it, whatever. That's fine. But on the off chance that it does flip, then we'll look to take the entry. You know, I really do like that. I like rallies that fade. I'll take an entry on that. It just has to fade for the entry to hit. So it's pretty effortless. Yeah, prices just isn't moving. You know, there's nothing I can do. I feel like the trade logic was fine. Trade logic's fine. We entered on various different elements of price, and it's just not working today. I mean, we're pretty close to the stop, like a couple points. Yeah, like 2 points. Yeah, there we are. All right, so that's the stop. Break even. Break even trade. There you go. So hopefully you guys enjoyed that. We took a break even trade today. Yeah, that's about it. It really just kind of invalidated. So the idea was pretty solid. Rotation here over Asia high. You got the market structure shift, fair value gap entered here, entered on the order block as well. And then it just kind of dug back into an awkward spot where we were positioned. So, yeah, I mean, I don't really want to leave extra risk on a trade like this just because, I mean, I'm telling you the difference between here and a high of day is like nothing. It'll just go. It'll just go. So that's why I'm like willing to be tighter with it. However, you know, we'll just kind of take it there. I think that's fine. Stream for a little bit. So if you guys enjoyed hanging out, leave a like. We'll be back at it pretty soon, maybe tomorrow. Interesting. Let's see. Let's see. Maybe we just got shaken out of something. Yeah, it looks like we're about to wrap things up. Oh, hey, doggy, how you doing? Yeah, I think we're about to wrap things up. So yeah, thanks for hanging out. Stream for a little bit. Took a trade. Was all right of an idea. I don't mind it. I think it was fine. It's just the condition of the market is not favoring any sort of directional move. It wants to dig back pretty deep on things. So we'll just kind of wrap it up there. I mean, there's like a slight chance this was the fake out. Like it's a slight chance that it just kind of squeezed the stop. I'm not too certain on that though. Yeah, this is kind of really what just happened to us. This little squeeze. It's unfortunate, but nothing you can do. Yeah, 15 looks substantially different. Hmm. Yeah, I think we're good there. I think we'll wrap it there. So down like 300 bucks from yesterday, kind of. But yeah, I mean, I think that might be it. There's a chance this is a swing point right here, and we get the candle flip. I just don't know if I want to try it. I don't know if I'm feeling it. Hard to say. What's the volume looking like? All right, so yeah, so you're starting to see that push. So it's a reclaim of the fair value gap so far. That's kind of the action you got. Interesting little switch of sentiment right there so far, right? So any kind of return back below here can indicate then, yeah, we'll go for the lows again, but really just nasty work, right? So you finally get some notable shifts to the downside, and then you just get squeezed out of the lows. That's really all you're seeing so far. It's just a nice break on big volume and then just nothing. And people will say, "Oh yeah, don't trade Asia because X, Y, or Z." It's like this is the exact dynamics of Asia. It's like all markets are generally the same. There's a little bit different tendencies overall, but like most conditions, most sessions are the same, regardless of the volume. They act the same. Some have bigger ranges, some have smaller, but this right here is not like it's not surprising. But anywho, yeah, I think I'm gonna wrap it there. We'll be back tomorrow. Thanks for hanging out. Talk to you soon. If you like what you see, leave a like.